Thank you, and good morning. I'd like to welcome you in person to the in-person meeting, which I think we're all pretty pleased to be here today, and it's been a long time coming. So, good morning, ladies and gentlemen, and on behalf of the board, I'd like to begin by acknowledging the traditional owners of the land on which we meet today, the Jagera, Gable and Jaraware people. We also acknowledge the traditional owners of country in the communities in which we operate as well throughout Australia. We pay our respects to elders past and present. Welcome to the annual general meeting of Namoi Cotton. My name is Tim Watson and I'm the chair of the company and the chair of today's meeting. We are holding today's AGM as a hybrid meeting, thus allowing shareholders to attend in person and virtually via a webinar as permitted under our Constitution. As such, in addition to members present in the room today, we also have members who are joining this meeting virtually. For virtual members, if we experience technical issues throughout the AGM and they are not resolved within 5 minutes, we will adjourn the meeting and reconvene at 12 noon Brisbane time today. It is the board's intention to hold every shareholder meeting in person. However, we do recognise that widely adopted technology now allows for the pairing of a physical meeting with a virtual component. We believe the benefits from such pairing include more flexibility, increased reach, maximised attendance and better engagement, and they outweigh the increased organisational requirements and the risk of technical difficulties. I note that based on the proxy votes lodged, it appears that we will receive more than 25% no votes for resolution number 5, which would have approved the company to hold wholly virtual meetings. It was not the board's intention to hold fully virtual meetings. However, in extreme circumstances, such as we experienced during the recent COVID-19 pandemic, there are instances when this could be required. We accept shareholders' feedback in regards to this resolution. All details regarding the AGM were released to the ASX announcements platform on today, the 19th of June 2022, and are published on our website. Voting on all resolutions is by way of a poll, and you've been provided with access to the online voting platform for this purpose via the notice of meeting. Shareholders attending the meeting in person in Toowoomba are provided poll voting cards to vote on all resolutions. Our company secretary, Sonia Ryan, has advised that we have a quorum present, and I formally declare the meeting open. Firstly, it's my pleasure to introduce the members of our board who are attending in person. So first of all, on my left is Ian Wilton.
Good morning, everyone.
Then Juanita Hamperson.
Good morning.
My right, Joe DeLeo.
Good morning.
And Robert Green.
Good morning, everybody.
The company's Chief Executive, John Stevenson, present today.
Good morning.
As in person in Toowoomba, as is the company's auditor, Wade Hanson. Good morning, Wade. Representing Ernst Young, who is available to answer questions in relation to the audit of the company's financial accounts. Computershare representatives are in attendance, and I welcome Jessie Yerma as a returning officer for the purpose of the poll. Firstly, I'd like to acknowledge the hard work and dedication of our Namoi Cotton team, led by our CEO, John Stevenson. I would also like to take this opportunity to introduce and welcome our Chief Financial Officer and Company Secretary, Sonia Ryan, who joined us this year and will be in charge of the meeting today. Welcome, Sonia.
Good morning, everybody.
Later in the meeting, John and Sonia will report on a detailed business performance and outlook, as well as provide an update of our strategic plans going forward. On the 30th of October this year, Namoi Cotton will reach a historic milestone when we celebrate our 60th continuous year of business. Namoi Cotton came into being following a meeting of growers in Wee-Waa on the October 30th, 1962. Namoi Cotton has played a fundamental role in the success of the Australian cotton industry to date. Your board and the management team are committed to ensure that Namoi Cotton maintains that relevance and influence on the Australian cotton landscape now and long into the future. The 2021 season, or FY22, was the start of a turnaround in the cotton industry after several years of punishing drought in Eastern Australia. Although their 2021 production volumes were below average, we have reported our first positive EBITDA since FY 2019. For the 22 season and the medium term beyond that, the outlook for cotton production is exceptional. Good water availability and strong prices will encourage growers to continue planting cotton as a preference. We will deliver increased earnings and cash flow in the coming years, and I assure you that the board is focused on ensuring capital is allocated appropriately to maximise shareholder value. That is to shareholders in the form of dividends, financiers in terms of debt, repayment, and growers in terms of investment in our facilities and services. We maintain a focus on reducing debt and only investing capital in projects that deliver returns in excess of our cost of capital. In future years, we intend to return to paying dividends to shareholders as cash flow allows. The board and management are proud of our history as a grower-based organisation. Later today, you'll be voting on a resolution regarding maintaining the grower director representation rule. Your board has recommended you vote against that resolution, and the votes received indicate the resolution will not be upheld. Rest assured, we will always value and maintain a deep connection with our grower base, which today is represented more in terms of service delivery as opposed to direct ownership and board representation. It is your board's intention to include a provision going forward in the board charter to maintain at least 2 directors with current or recent cotton growing experience. I would like to take this opportunity to thank my fellow directors for their tireless contribution and support over the last year, and supporting myself, and importantly to you, our shareholders, thank you for your continued support. Before we commence the formal meeting, I note that based on the proxy votes lodged, it is apparent that we will receive more than 25% no votes for a remuneration report, which is resolution number 1. This constitutes a first strike under the Corporations Act 2001 and something we do not take lightly. The feedback I've received from most shareholders is that they are supportive of our remuneration principles, while some questioning the best way to link remuneration with increased shareholder value. However, our largest shareholder, Samuel Terry Asset Management, or STAM, have submitted a proposal to modify our long-term and short-term incentive plans to be, in their words, more aggressively aligned with shareholder outcomes. The major changes proposed by STAM include non-executive directors, together with key management, being remunerated via share rights which vest based on share price performance, as well as an increase in the percentage of remuneration received in shares versus cash. In accordance with the ASX corporate governance principles and recommendations, your board does not support performance-based remuneration for non-executive directors, given that it may lead to a bias in their decision-making and compromise their objectivity. We will continue to discuss these matters with STAM and other shareholders, and prior to reporting on how we have taken these issues into consideration for the remuneration report next year. As I said, we don't take it lightly. There are several procedural matters before I deal with the formal business of the meeting. Today's meeting is being held in person and online via the Computershare meeting platform. This allows shareholders, proxies and guests to attend the meeting virtually. For those participating online, attendees can watch live webcasts of the meeting. In addition, shareholders and proxies have the ability to ask questions and submit votes. If you're joining us online and you're eligible to vote, once voting opens, press the vote icon and all resolutions will be activated with the voting options. To cast your vote, simply select one of the options. There is no need to hit the submit or enter button as the vote is automatically recorded. You will receive a vote confirmation notification on your screen. You can change your vote up to until the time I declare voting closed. Online attendees can submit questions at any time. To ask a question, select the Q&A icon, type your question into the text box. Once you have finished typing, please hit the send button. Only those holding blue or yellow cards or participants on the online platform are entitled to speak at the meeting. To ask a verbal question, please raise your hand, state your name and the shareholding you represent, and if you're online, follow the online instructions written below the broadcast. Please note that while you can submit online questions from now, I will not address them until the relevant time at the meeting. Please also note that your questions may be moderated or, if there are multiple questions on one topic, amalgamated together. During the meeting, we will display slides for each item of business and the number of proxy votes received for each resolution. The results of voting by way of poll will be released to the ASX as soon as they are available and will be displayed on the company's website. As Chair, I will vote undirected proxies in favour of resolutions 1 and 3 to 6 and against resolution number 2. We encourage members to submit questions in respect of the resolutions as they are presented and also follow the presentations from our CEO, which will take place after the formal business of the meeting is concluded. We'll now move to the formal business of the meeting as found in the notice of meeting. Resolutions and proxy votes received will be displayed in turn. The first item of business is to receive and consider the financial report of the company and its controlled entities for the financial year ended 28th of February 2022 and the related Directors' Report and Auditors' Report. Please note that there is no requirement for shareholders to approve these reports. Do we have any questions from the floor? No?
No questions from the floor, Chairman.
Do we have any questions online?
No questions online, Chairman.
As we have no questions, we'll now move to the formal business of the AGM and I declare the poll open for voting. Resolution number 1, the Remuneration Report. Resolution number 1 is to consider the Remuneration Report for the financial year ended 28th of February 2022 and, if thought fit, pass a non-binding resolution to approve the Remuneration Report as an ordinary resolution in accordance with section 250R of the Corps Act 2001. Do we have any questions from the floor?
No questions from the floor, Chairman.
Do we have any questions online?
No questions online.
There are no questions relating to resolution number 1. The proxy votes received are shown on your screen. As Chair, I'll be voting these undirected proxies in favour of the resolution. All directors recommend that shareholders vote in favour of the resolution. I now put the motion to shareholders and request that you vote using your poll cards and using the online voting platform that has been provided to you. This brings us to resolution number 2, and I'll now hand over the chair to Joe DeLeo, who's our Chair of People, Culture and Nominations, to handle this.
Thank you, Tim. Resolution 2 is a special resolution to approve continuation of the grower director representation rule in the company's constitution. The grower director representation rule was introduced in 2017 for the purpose of providing stability for Namoi cotton grower members with respect to board membership. The rule was put in place with the objective of ensuring the interests of grower members who became shareholders were always considered and addressed by the board after the restructure of Namoi Cotton from a cooperative to an ASX-listed company. The rule requires that at all times 1/2 of the total number of directors must be grower directors for so long as the grower director representation rule applies. If Resolution 2 is approved and both Mr Green and Mr Watson are re-elected as directors, under Resolutions 3 and 4 that follow this resolution, the board will need to adjust the number and composition of directors in order to continue to comply with the grower representation rule. The explanatory memorandum lists advantages and disadvantages for retaining this rule and other recommendations from directors regarding this rule. Do we have any questions from shareholders from the floor? No?
No questions from the floor, Chairman.
Any questions online?
No questions online.
Thank you. The proxy votes received are shown on your screen. As chair, I'll be voting these undirected proxies against the resolution. All directors, with Juanita and Tim abstaining, recommend that shareholders vote against the resolution. I now put the motion to shareholders and request that you vote using your poll cards and using the online voting platform that's been provided to you. I'll now pass back to the company chair, Tim.
Thanks, Joe. Resolution number 3. Resolution 3 is to consider and, if thought fit, pass an ordinary resolution to approve the re-election of Robert Green as an independent, non-executive director of the company. I'll just invite Robert to say a few words on his behalf.
Thank you, Tim, and good morning, everybody. I'm seeking re-election at this AGM for an additional term. Thank you for all your support over the last few years, and I look forward to your continuing support for the upcoming election. So we still have things to do with the company, and I think it's an exciting place to be. Thank you.
Thank you, Robert. Do we have any questions from the floor?
No questions from the floor, Chairman.
Any questions online?
Yes, Chairman. Andrew Brown of Abron Management Services Proprietary Limited has asked, on re-election of Robert Green, could Mr Green tell us of any ongoing relationships, formal or informal, with Louis Dreyfus Commodities or any of its subsidiaries?
So I retired from Louis Dreyfus at the end of March 2019, and I have no ongoing relationships with Louis Dreyfus.
And probably I could add to that, as a board, we assess the independence of all directors, and we're comfortable that Robert has he's declared his independence and that he sits on the board as an independent director, totally unrelated to Louis Dreyfus.
There's no more questions, Chairman.
Thank you. So no more questions. The proxy votes received are shown on your screen. As chair, I'll be voting these undirected proxies in favour of the resolution. All directors recommend that shareholders vote in favour of the resolution. I'll now put the motion to shareholders and request that you vote using your poll cards, using the online voting platform that has been provided to you. I'll now hand over to Joe to chair the meeting for this next resolution.
Thank you, Tim. Resolution 4 is to consider and, if thought fit, pass an ordinary resolution to approve the re-election of Tim Watson as a non-executive director of the company. I'd like to ask Tim to say a few words.
Thank you, Joe. The reason I'm standing for re-election is that, as most of you would be aware, I sat on the board as a grower director. We've sold our cotton farm. We're no longer a cotton growers as such, and we technically, according to the Constitution, ceased to become a grower director. I then re-stood filled a casual vacancy as a non-grower director, and hence I'm up for re-election at the next AGM being now. I've been through a lot with Namoi. I think we're at a great period, and I think that I can add a lot of value to the company in the future, and I'd seek your support in voting for me for re-election.
Thank you, Tim. Do you have any questions from the floor from shareholders? No?
No questions from the floor?
Any questions online?
No questions online, Chairman.
Thank you. The proxy votes received are shown on the screen. As chair, I'll be voting these undirected proxies in favour of the resolution. All directors recommend that shareholders vote in favour of the resolution. I now put the motion to shareholders and request that you vote using your poll cards and using the online voting platform that has been provided to you. I'll now hand back to Tim, the company chair.
Thanks, Joe. Resolution number 5 is a special resolution to approve an amendment to Articles 2.5, 9.2, 10.2 and 10.5 of the company's constitution. Under the Corporations Amendment Act 2022, companies are permitted to hold hybrid shareholder meetings, that is, partially physical, partially virtual, and will only be permitted to hold wholly virtual meetings if the company's constitution expressly permits it to. The proposed changes to the constitution allow the company to hold virtual shareholder meetings if the board elects to. Do we have any questions from the floor?
No questions from the floor, Chairman.
Do we have any questions online?
No questions online.
As there are no questions, the proxy votes received are shown on your screen. As chair, I'll be voting these undirected proxies in favour of the resolution. All directors recommend that shareholders vote in favour of the resolution. I now put the motion to shareholders and request that you vote using your poll cards, using the online voting platform that has been provided to you. Resolution number 6 is a special resolution to approve an amendment to Article 11.1 of the company's constitution. The purpose of the resolution is to remove the requirement to have an even number of directors. If resolution number 2 is approved, then resolution number 6 is withdrawn and the votes cast will not be recorded for the purpose of this meeting. However, if resolution number 2 is defeated, the votes cast on resolution number 6 will be recorded and reported for the purpose of this meeting. The outcome of the poll results on whether resolution number 6 remains or is withdrawn will be reported after the conclusion of this meeting. Do we have any questions from the floor?
No questions from the floor, Chairman.
Do we have any questions online?
No questions online.
Proxy votes are shown on your screen. As chair, I'll be voting these undirected proxies in favour of the resolution. All directors recommend that shareholders vote in favour of the resolution. Having completed the last item of business on the notice of meeting, I remind shareholders that poll voting using the online voting platform will remain open whilst Computershare representatives collect the poll cards from those members present in the room today before I formally close the poll. So I'll ask the Computershare guys to wander about and collect your voting cards. While they're doing that, we're happy to take any questions that anyone may have. We've got no questions from the floor. I believe we have some questions online.
We do. Andrew Brown of Abron Management Services Proprietary Limited has asked, Given the recent acquisition of shares by Louis Dreyfus Commodities, can you spell out the nature of the exclusivity arrangements in marketing between Namoy and LDC? Have they changed materially since 2013, given the change in NCA ownership? Would these arrangements affect the sale of any ginning assets and require a make-good payment to LDC? Do they impact on Namoy acquiring gins by having to use LDC for certain amounts?
That's a very detailed question from Andrew, and I thank him for his question. John, probably the best to answer.
I think it's a bit difficult to answer that in full detail, and I'd be happy to engage with Andrew. It is Andrew afterwards, but I think let me try to address the highlights of the question. I think firstly, in terms of the nature of the relationship with Louis Dreyfus, I refer you to the announcements that we made when we restructured the agreements in 2019-20. A whole lot of information was published in relation to that, and the nature, I think the core nature of the relationship didn't change because of that restructure. However, the shareholdings in regards to the Lint marketing business did change, where we reduced our shareholding and our obligation to debt servicing. They were the primary changes, but the nature of the relationship remained the same. If the balance of the question is around whether or not the relationship impacts upon the way we do business, in general, I say that it doesn't. It's a partnership in terms of how we market lint bales. So it does not stop us or restrict us from doing business in a particular way. But I can't speculate as to whether or not the market might feel as though that was conducive or not to partnering with us. But SJ, have I covered them? Could you just have I covered the major points of the question?
Yes, I think so. Would the arrangements affect any sale of ginning assets and require a make-good payment? Do they impact on Namoy acquiring any other gins to use for LDC?
I think in terms of in general, in terms of buying and selling assets, ginning assets, this relationship doesn't impact directly on our ability to buy or sell assets. In terms of, sorry, the other point that we made. I don't think again, Andrew, very happy to answer your questions, your concerns, any concerns you have directly, but the relationship doesn't prevent us in terms of our ability to buy and sell assets nor conduct new business, but it does dictate how we partner or market our lint cotton through that's generated through our gins.
Thank you. We have another online question from Andrew Brown of Abron Management Services Proprietary Limited. Would the company contemplate selling an individual ginning asset to repay debt any earlier?
I think we're assessing all options in terms of managing our balance sheet. I think we've made it very clear that we would like to reduce our debt numbers, our leverage ratio. Whilst it's still quite healthy at 30%, our leverage ratio, we do have a target to reduce that further. Whether or not it's not impossible that we would look to sell assets, but that's not our primary focus. Our primary focus is to increase our asset base and look to increase earnings.
There's no other online questions.
Thank you, Sarah Jane. So if there's no other questions, the votes have all been collected, and the guys in Computershare will be adding the numbers up, which they'll publish on the on the website. So that concludes the formal business of today's meeting. I now declare the poll closed, and I'd now hand over to our CEO, John Stevenson, and ask John to present his report that's been also published on the company's website and on the ASX announcements platform. Thank you.
Thanks, Tim. Just take the opportunity to welcome everybody again to this to our 22 annual general meeting. It's great to have people in the room and be physically in touch with people. I'm going to give a presentation in regards an update on our strategic plans, as well as an update in terms of the outlook for the current season as well as the coming seasons. But before I do that, I'd like to introduce our CFO, Sonia Ryan, to give an update in terms of the financial results for FY22. Sonia.
Thank you, John. My report is a refresher of the information we presented in April this year on the release of our 2022 annual report. The slides may raise some questions for you that I'll be happy to answer at the end of this presentation. Slide 5 summarises the business highlights for FY22. I draw your attention to 2 points. Firstly, the positive $1.6 million EBITDA, which was a significant improvement on the previous year's $12.7 million loss. And secondly, the $4.7 million reduction in core debt. Slide 6. Just a reminder, we ginned 493,000 bales in the 21 season, which was 40% below our 10-year average. We did maintain our market share in our catchment valleys of just under 40%. The slide also highlights how much additional volume we put through our seed and packing businesses. Slide 7. Earnings. As I mentioned, FY22 resulted in an EBITDA of $1.6 million, our first positive EBITDA since 2019. As you can see from the bridge, the major turnaround was from our JV and associates at $8.3 million, and our increased ginning volume generating an additional $12 million. The extra funds were invested in our Gin Ready program to ensure the business was ready for the large season ahead. Slide 8. As I mentioned earlier, the key number here is the $4.7 million in reduction in core debt. The bridge below shows how we achieved this. At the end of FY22, our gearing ratio was just under 30%. This remains our focus to reduce debt and lower gearing in line with our strategic plan. Slide 9 summarises the cash flow movement. The big number here is the $10.3 million capital raise. The table below indicates where this was allocated, which was predominantly $2.9 million to repay debt, with the bulk of the funds allocated to maintenance and CapEx to ensure we were ready for the big season ahead and beyond. This concludes my short summary of the financials presented in April. I'm more than happy to answer questions at the end of John's presentation. Thank you, John.
Thanks, Sonia. As we said, these slides contain a lot of information, so don't hesitate to reach out, or if you've got any questions in the meeting, but afterwards you can also reach out to us. I'm going to give an update in terms of our strategic plans. As we announced last year, our 4PP strategy is all about reinvesting in our existing business while broadening our revenue base. As this slide says, we're more than a ginner, and this highlights our integrated network across New South Wales and Queensland. And this season, I can tell you that network is running at full capacity. We look forward to that for the next couple of seasons. The 4PP strategy is a combination of the investment in the existing business in terms of equipment, but it's also targeted expansion and a commitment to become an employer of choice in the ginning industry, and I'll touch on some of the specific projects in the presentation here. We're really excited about the expansion opportunities for cotton in Northern Australia. In Western Australia, as we announced earlier this year, we've signed an MOU to design build and operate a new gin in Kununurra. This is a partnership with local growers, with government support and financing. And our team has been working on a design tailored for the unique conditions in Kununurra. I can say it's been challenging, particularly staying ahead of the inflationary pressures and the changes in logistics as we've designed this project with the majority of the equipment being built and imported from overseas. But I expect to be in a position to provide an update on this project in the coming months. On the right-hand side, or North Queensland, we're completing feasibility studies for a new gin in far North Queensland and/or in northwest Queensland. We spent a lot of time on the ground in North Queensland visiting growers, local governments. I can tell you there's a huge amount of support and interest in this project. And again, I'll keep you updated as this progresses. We're investing $21 million into our 4PP program, and we're forecasting to generate an increase in sustainable earnings of $5 million in EBITDA. This program is funded solely from internal cash flow from the large seasons that they're currently undergoing. And it's also internal cash flow is scheduled to fund our $9.5 million reduction in term debt. Some of the projects that we've completed and are in process, we've completed the picture on the top right-hand side there is the $2.1 million upgrade in drying and cleaning equipment that we've implemented at Moran North Gin. This equipment's in progress, it's in use right now, and it's helping us to process wet cotton at greater efficiencies. We've also upgraded the feeder bay at Wathaga Gin, and the picture below there on the bottom right-hand side there gives you an update or progress on the building of a new 8,500 tonne seed shed at Boggabri Gin, which will be ready to accept seed in the coming months. In addition to these hard assets, we're also upgrading a range of systems to support growth, including our trading platform, CRM system, repairs and maintenance. We've upgraded our general ledger system, so there's a whole lot of things going on in the background as well. And we're also investing in our employment program with training, apprenticeships, and we've also got an overseas pipeline of overseas workers that we've brought in this season. To give you an update in terms of where the business sits, firstly in regards to the current season, I can confirm that we are on track to gin between 1.1 and 1.2 million barrels this season. It's been an extremely wet season, wet year, which is both a blessing and a curse. It's certainly impacted or delayed picking, and cotton quality has been negatively impacted. The chart on the left-hand side just basically shows that we're roughly 4 weeks behind where we would normally be at this time of the season. You can see there the comparison versus the 17 and 18 seasons. And we're expecting now to finish ginning in either late September to early October. Every year has its challenges. The right-hand side really lists out some of those issues. Productivity this season will be slightly below average given the higher moisture content and the need to run gin slower with more heat and cleaning. And you can't pick up a newspaper these days without seeing cost increases. There's no doubt that inflation has impacted our cost base. Gas, diesel, labour, electricity have all increased substantially. Just on electricity, we do have forward contracts for supply prices, but we are exposed to the fluctuating access charges. Those cost increases, some of that has been passed on to customers, not all. Most of the ginning for the current season was contracted a year ago. But the other point I would make in here is in regards to supply chains. Road and rail networks are all congested. And in some cases broken. The rail is still disrupted due to flooding in New South Wales. And there simply aren't enough fit and healthy drivers to drive trucks That's the reality of the position we're in. I would say everything is moving. It's just taking longer, and it's costing more. That's a lot of bad news there in the ABC, but I will say that there is good news. Point D there is commodity prices are very strong, and that reflects in really good demand from overseas and domestic customers for our cottonseed, which has been very strong this season. We don't provide a financial forecast, but the left-hand graph plots our financial performance versus volumes. And as I've said in that previous slide, when you balance that historical performance against where we are this season, higher cost offset by higher margins. In regards to the outlook for next season and beyond, the prospects still look excellent, as Tim highlighted. Water storage levels remain at record highs. Prices have decreased, but they're still above average. And on the right-hand side there, you can see the industry is forecasting a record Australian crop for next season of circa 6 million bales. Our focus is to remain on execution. It's all about the execution. That's the first step. We're focused on that. We remain focused on that for the remainder of this season and planning now for next season. And we look forward to the increased volumes in FY24. With that, I'll finish and take any questions via the floor or online. Mitch from Seminole Terry.
Thanks for that. Could you give us a little bit more detail about the status of the feasibility or pre-feasibility study for the North Queensland deal? What's the capital quantum?
In terms of the current status, I'd say that, and we're talking just specifically North Queensland?
Yep.
We're currently engaging with the government. I think I could say that we've got indicative in principle support from state government and certainly local governments in order to provide support for the infrastructure. And the key decision factor at this point is whether or not there's enough electricity supply into these remote communities. So we're currently at that stage of the feasibility study. There's no rejection or objection to putting the investment into these areas, but whether or not the line can handle the amount of electricity is currently being assessed, and that's a month, that's 6 months or so process to come to the conclusion. So that's where we're at in terms of the overall process. In terms of the cost, it's not too dissimilar to the WA costs that we've quoted in the past. Inflation is certainly changing the number, but it's somewhere between $40 to $50 million for a new gin, and that would be the case in North Queensland. I wouldn't see it any different to that.
And for the sake of clarity, in my understanding is that the WA venture largely involves, for lack of a better word, other people's money, and you are not financing that with Namoy's capital. Is there going to be a similar model? Do you intend to propose a similar model for the North Queensland gin, or is this capital activity largely expected to be financed by Namoy shareholders and its banks?
Well, on the WA gin, as we've announced, we've MOU to invest 10% in there, with a majority funded from other grower equity as well as government debt. I think the model at this stage, whilst it hasn't been finalised, the model will follow a similar pattern of partnership with growers, providing a bulk of equity. Whether or not that hasn't been finalised, but that's the plan at this stage.
Thank you. And just one more. One of the slides suggests that the debt level needs to be reduced to 32.6 million over it's quite small, but about 18 months, I would have thought. Is that enough? Where should the debt be in 2 years' time?
think so firstly, in regards to debt reduction, that is an agreement that we've got with CBA, as I think we announced in our annual report update. So we think that's an appropriate level to get into those 20s, and with a debt leverage ratio of in the mid-20s%, I think is our initial target. I wouldn't quote a specific number, because I think as the earnings profile changes, I think that debt number can change. But basically, if we're looking at a leverage ratio versus the balance sheet, I think in the 20 to 30 range, 30 is at the high end.
Thanks.
John, I might just add a bit to that. The North Queensland or Northern Australia is just something that we don't, as a company, we don't want to miss out on an opportunity. But we're also extremely mindful of not getting ending up with a stranded asset. So if we look at what happened in the south, there was 25% of the Australian crop grown in southern New South Wales 3 years ago, and we were only participating in a very small part of that. So if there is a major expansion to the north, we want to be part of it. And if that's the future, of cotton growing in Australia, or part of the future, but we're very mindful of having other partners with skin in the game to bind them to any venture or whatever that we might come up with. Any other questions?
Any questions online, SJ?
No questions online. Any other questions on the floor?
Thank you.
So if there's no more questions, and we'll close the general part of the meeting and invite everyone to hang around and have a cup of tea and have a chat. We thank you very much for coming, everybody.
Thank you.